All right. All right. All right. I think we're live. Let me just hear this. Let's see. Yeah. Let's do this. Let's do this. Let me just check the volumes. Just want to see that the volumes are good. Sounds good. All right. Perfect. Let's do this. Let's jump into the markets. The markets are open. The London session has officially opened. We'll take a sip of coffee to celebrate that. Monday. Monday's fun day. Markets are open. As you guys see, I don't have my assistant with me today. That's usually my brother sitting here, being my assistant in these analyses. As you guys see, I don't have my assistant with me today. That's usually my brother sitting here. Just cut that off. Let me just fix the sound here. Yeah, it's much easier when you got a assistant. When you ain't got that, it gets a little bit more difficult. But we will manage. All right. So with that said, let's jump into the markets. Now I think everything is cool now. Okay, so we had a Fed speaking not yesterday, last week, and we had Jerome Powell speaking for the Fed, the FOMC meeting, and he was quite dovish in his speech. So we saw the market rally, and then what happened? The market just U-turned on Friday when the news got released, and job earnings, and I don't remember exactly what was released, but I know the job earnings statistics and what more. Okay, anyway, so we can't see yesterday's news, and that's good because we want to focus on this week's news. And this week, today, the only red folders we see is AUD, and then we see an orange folder for CAD, Canadian dollar, Australian dollar, and Canadian dollar. And right now, I'm planning to trade AUD or CAD, but if we do, we keep that in mind, and then we go check if that is something that is important in importance for the pairs we trade. All right. And by the way, I have to announce also this week. Tomorrow will be the last live stream for this week because I'm traveling. Me and the squad is traveling actually. So maybe we send something live, but I don't think it will be trading. But maybe we send some podcasty vloggy thing live on YouTube. But so Tuesday we're traveling. I will do tomorrow morning, but Wednesday, Thursday, Friday, no. Then next Monday we're starting a live boot camp here. So for all y'all that don't know much about trading, how to analyze the markets and stuff like that, we will do a boot camp where we will go through the basics. So with that said, let me just check something. Yeah. So we will go through the basics. What is a candlestick? What is Forex? What is support, resistance, trends, pips, and all that stuff? We will go through it. So we will basically do a boot camp. So it's planned for next week, Monday, Tuesday, Wednesday, Thursday, Friday, and then we'll probably continue. We'll see about that. But we started like that. So for everybody that has the possibility to be on these sessions in the morning and that wants to learn the basics in trading, y'all be in the right place at the right time. Starting next week, remember that. So with that said, let's jump into the markets and see what we see. We're looking at Manara right now. For y'all that be new on the stream, Manara is my favorite analyzing tool. It's an AI that scans the market for patterns. Let me just refresh it so we'll see if we got something new. So that's it. AUD CAD, not complete, not complete, not complete. So what we're looking for is, this is the symbols, of course, the currency pairs. This is what pattern it sees on what time frame, and if that pattern is complete or incomplete. All right, that's the most important part, thing that you need to focus on right here. So let's look at we got a lot of AUD, and we saw AUD had some red folders. So if we want to trade AUD, we got to be cautious about the news that will come out. All of these are incomplete. So let's jump into CAD. It had an orange folder. It's a triangle pattern. I'm not very fond of them. Let's check Euro USD. This one is incomplete, but I want to check it anyway. Yeah. So if you're in my Telegram group, in my Telegram signals channel, and if you've been on the streams, then you know that I've been on AUD, Euro USD for a while now. So I'll call this trade out about here at this 50% Fibonacci retracement line, and that's about at 109.40. I called it out then, but the market moved so quick here and then came to retest, so I didn't even catch it myself. I didn't want to put a sell limit because I wasn't sure if this was going to hold. I wanted to see some confirmations. We got the confirmations. Market broke through, came and retested perfectly, but I missed it. I hope some of you guys got the chance to take it, and if you did, congratulations. Yeah, and a nice profit right now. Let me see how many pips we got from here down to here, about 150 pips. So yeah, and a nice profit right now. So that is good. I'm not quite sure if this will hold, if the market will come up again and test these levels again. We got a lot of volume down here. So a market, as I always say, tends to magnetize towards where the volume is, because that's where you're going to see a lot of orders, unfilled orders. So we have a lot of unfilled orders all over here, but we see the volume peaking at the level where it's at now, and then here in between 106 and 106.7, 106.8. You see another peak of volume. So if this doesn't hold, I'll see the market definitely coming down here and retesting this. Oh wait, let me see. At least retesting this 27.2 Fibonacci extension from this swing from the bottom here to the top here. But let's pull a new Fibonacci. Let's clean this chart up a little bit to see what we see here, to see what we got. All right. So with this said, if the 23.6 Fibonacci retracement doesn't hold, which is this blue line here, I see it coming down to 38.2. Yeah, of course, obviously it will come down, but it will come down all the way here because we have one volume peak here, and then we get the other volume peak here. And market tends to retest these Fibonacci levels. So, and that confluent with the volume peaks is perfect. That is for Euro USD. For now, there ain't much to say. We definitely ain't going in for a buy. Like, what I can say quickly is we have a lot of volume here. So in this zone and in this zone, it's a lot of volume. So there's a big chance that the market wants to come up, clear that volume before it goes down or before it continues up. But if this market does what it does, and that analysis is definitely based on the US dollar. So if the US dollar does what I think it will do, then it will drop down more. And if it drops down more, that means the Euro USD will move up more. It will continue on its uptrend. But before that happens, it needs to come down and clear some liquidity. People need to take their profits and jump into new positions, new trades here, and that is what we see for that. Let's go into gold. Gold had a crazy rally, almost the same thing. So gold, same as Euro USD, been on this crazy bull run, and that is a lot due to the dollar. You got to understand why you see gold and euro race like this is because they are paired against the dollar. Same thing with the GBP USD, even though it's been much more ups and downs with that. But why you see, for example, euro and gold raised like this is because they're paired against the dollar, and the dollar, as you see, is the opposite, has been going down. So when the dollar goes down, the gold and euro goes up. And if you see the last week, the last of last week, then you see this bull run for the Dixie, for the euro, for the US dollar, the dollar index, and that little bull run made what? Caused this drop that you see here, this drop, and this drop at gold. And gold, what it has done is, you see this volume spike here. This is a volume spike, and I pulled this orange box here to mark out that volume spike. So that volume spike is where market, you see, it almost broke right through it and came back, magnetized. This is what I'm saying. Market is always magnetizing to these volume spikes. That's where you find a lot of orders, a lot of demand, a lot of supply, and it's exactly what happened. Market broke straight through and came back to retest it and retest the 200-day EMA from underneath. So it's retesting the 200-day EMA from below, from underneath. So it's retesting it as resistance. So this is on the 4-hour time frame, and we will see now if this holds, and if the market wants to break through and move up a little bit, clear some of this liquidity that we got stuck here in this whole range, or if it's going to bounce out of the off this 200-day EMA and move on down. That's what we're looking for now. Now, to find out, we obviously have to do some technical analysis and see if we can get some confirmations in either direction. So the first thing we do is we pull up Fibonacci. Opa. If you have a Mac and you hold Command while you're hovering above these wicks, what happens is the pointer will automatically magnetize towards the lowest wick, or if you're above here to the highest wick. That's an easy hack to easy pull the Fibonacci from the right point. Okay, so as you guys see from this swing, let me pull up my highlighter. So from this swing, from this bottom here to this top, that's the last significant swing we had. What did market do? It dropped down all the way. This was this Friday. Dropped down all the way, left a lot of liquidity there, all right? But it bounced off, because from this bottom to this top, if we pull Fibonacci on the last swing, then we have the 161 Fibonacci extension. 161 Fibonacci extension is this line here. And what did the market do? It acted as perfect support. So it supported the market. Market came back up to this liquidity zone that I was talking about, to this volume spike zone. is this orange zone, and it came up, magnetized to that zone, and it's now retesting the 200-day EMA as resistance. So let's see if that holds. And that resistance is very confluent with the 127.2 Fibonacci extension. So let's see what happens there. If we go to the hourly time frame, same thing. You have the 20-day EMA acting as what? Resistance. And it's testing it at this very moment. So we will see if it holds or not. If the market breaks through and retest this 20-day EMA, then we might go for buy. But what I would want to do first is I would want to see market break through this and retest this one as well, because what I think might happen is market comes up here and this 127.2 Fibonacci extension will act as resistance. All right. So if it breaks through this one, I want to see it break through this one as well. This is the box that we want to see cleared before we can enter a buy. Okay? If it doesn't break it, then we're looking for confirmations that market will continue down. That's where we're at right now. So right now we're touching gold. We're going back to Monero. We're going to see what it got in store for us. Euro USD, let's see here. Euro USD called out a sell, but that sell has already ran a couple of pips. Another Euro USD, all of these on the daily time frame. Let's see if we get something on a smaller time frame. Oh, this one is nice. GBP CAD. As you guys remember, we have a orange folder, news folder for CAD. So we have to check what that is and be cautious of the news if we take in this trade. So let's see, GBP CAD, let's look at it. Let's take a look at it. GBP CAD, let's go to my Forex list. GBP CAD is there, nice. Let's do like this. Let's clear all. No, that's not the one. Let's clear all drawings. So first things we do is always we'll look for the volume spikes. So we'll go to the 4 hourly time frame. We want to check the volume spikes for this swing here. All right. We have this impulse move, and we want to check the volume profile. This is the volume profile for this impulse move. How do we do that? Well, the volume profile shows you the volume for everything that is visible on the screen. And so you want to show on the screen what you want to see the volume for. And because this liquidity here is cleared, we want to see the volume for this swing only. For this zone only. Let's do like this. Let's go on a 4 hourly time frame. So, all right. So there's the bottom. Let's go to that bottom. Like that. Okay. Doing that, what we see is, let's pull out the rectangle tool. So doing that, what we see is, okay, we got a volume spike here. This is a volume spike. What does that mean? That means that market likes this area. Market will magnetize towards this area. Then we got a volume spike here. And then, yeah, some more underneath. And what's above it? We have a big volume spike here. This is a big zone with a lot of volume. Now, with that seen, we can zoom in. So, as you guys see, the market respects this volume, this area of a lot of volume, and it acts as resistance, as support and resistance, which is very typical. Same thing here. You see, market came down. This is the zone of the volume spike. Now I haven't pulled this box perfectly, but somewhat. And you saw that you see the market has came down, tested the zone of volume as support, broken right through, tested the bottom of it as support, came back up, tested the top of it as resistance, and right through again. So you guys see how the market respects the zone of volume. That's why it's very important to look at volume when you trade. Where is the volume? I can tell you this: institutional institutional traders, they use volume a lot. They trade something called depth of market. They use something called depth of market, DMO, and DOM, sorry. And what that is it shows you the different zones where the volume is and where the orders are coming into the market right now as we speak. So in the second, when the orders are coming in, they see that, and they can act upon that and do some crazy scalps because of that, because they see sell orders are there, we got buy orders there, we got more buy orders coming in down here, market will pull down here. So it's like they get an insight to the market, and you can do that too. The tool is called Jigsaw. They have different DMO, depth of DOMs, depth of market. You have a footprint chart. TradingView actually has a footprint chart, but it's not that good. So I don't use it that much. But if you want to have a good one, recommend Jigsaw. Google Jigsaw, and they have some crazy tools. I don't use it myself, but I think I will do it to get the same insight as the institutions have when they trade. So with that said, back to this. We have volume here, right? And market is stuck. Market is now stuck in this area. We want to see if market breaks out on the top or comes back down to retest the bottom of this volume zone. If it breaks the top, let me get my pen. If it breaks the top here, we want to see some kind of retest before we get a confirmation that we have a buy going on here. And if we have a buy, this will happen. We'll come here and retest this zone as well before we break in, or opposite. Get back down again and start ranging. Okay? To get some more information to this, so what was it? Monero called a buy, right? Yeah, it called a buy. And it called a buy on this zone. So I would put the TP1 definitely here. Yeah, this volume here needs to be cleared as well, so I can understand. Not only understand, I can agree with that buy. Let's check this swing here. So maybe we have a possible trade. So bear with me, stick with me, because we might see a trade here. Going back in the demand zone. Yeah, to be honest, the only thing we can do here is to see the last swing. So you guys see the 61.8 Fibonacci extension acted as perfect support. That's where the market bounced off from, and it will have to break the 27.2 as resistance before it can come up. So I would put the first TP here. All right, so GBP CAD, we got an entry for according to Monero, and I could definitely agree on that trade. Calling it out. Let me take this away. Let me go to the hourly time frame. Okay, so this is what's going on now. Okay, now I see. So market is testing the 20-day EMA on the hourly time frame. Well, 20-day EMA on the hourly time frame shouldn't be as big of a resistance, as strong of a resistance, and as you see on the 50-minute time frame, it's acting as support. So I would say that the entry for this trade is pretty much right now. You see this market come down here. Yeah. And that will act as support. What we got? 4 seconds left. Okay, let's see if this one closes above. It did. New candle opened above. This is an entry. At this level, let's just see if this is just a wick or if it will continue down. From what I'm seeing right now is just a wick, testing it as support, and then we will see the market reverse. If that is, then we have a trade right now. We're calling it out right now. And that trade will range from this zone all the way to the bottom of this liquidity zone, of this area of a lot of volume. Let's go back to the 5 minutes. It's trying, it's testing 20 DMA. We're looking for the market to pull back above the 20 DMA on the 5 minute time frame. If it does so, we have a very good entry. If it doesn't, there's no entry. This trade is so far 1 to 6 from what I see. Yeah, 1 to 6. But yeah, we get sellers are working hard right now to break through that zone. So still no entry, still no entry. We want to see this zone hold. We need to see it hold. So on the 50-minute time frame, we got 3 minutes left until this candle closes. Right now, it's an engulfing candle, which means that this selling candle is bigger than this buying candle. That means it's an engulfing candle for a bearish engulfing candle, which means the market might turn down and move downwards. So we don't want to see that. So we will wait those 3 minutes and see if the market, if the candle can close above the yellow line, above the 20-day EMA. That's what we want to see. If we see that, we have an entry. That's an entry for me. So somewhere here will the entry be. In the meantime, we can prepare this trade by looking where we're going to put the take profits. So last take profit, I would say, yeah, I would do like this. Take profit 1 is a 23.6 Fibonacci extension. Take profit 2, the 38.2 Fibonacci extension. Take profit 3, the 50% Fibonacci. Sorry, not extension, retracement. Sorry guys, morning tired. Need to get more coffee. So take profit 1 on the 23.6 Fibonacci retracement. Take profit 2 on the 38.2 Fibonacci retracement. And take profit 3 on the 50% Fibonacci extension. Sorry, retracement. And take profit 4 open. Because market might want to come up and clear this liquidity that we got here. We got a lot of liquidity here. Maybe even more than that. And test the top of this volume zone. Is this white zone that we see here, this gray zone. But the secure trade is this zone here. So that's what we're doing. So if you ain't in the Telegram channel yet, click the link in the description box for this video, for this live stream, and then that will take you to my free Telegram signals chat and my free Telegram signals channel, where I call out these trades. And right now we're waiting for GBP CAD to do its play and see if we entering for a buy or not. Right now, to be honest, it doesn't look very tempting because it's not doing what it's supposed to do. What it's supposed to do is it's supposed to close in 10 seconds. It's supposed to close above this 20-day EMA. Let's see if it does so or not. 4 seconds. 1 second. Oh shit! Almost went all the way up. Yeah, that wasn't that. So you see, look, this is trading. We were looking for confirmations. We didn't get them. What do? Do we jump into the market anyway? No. Yeah, of course, we want to trade. When we do want to jump into something, get some kind of action, but we rather not trade than to trade and lose money. So if our confirmations doesn't hold, if our signals doesn't hold, we cannot jump into the trade. And that is being patient with the market, that's being disciplined. And patience and discipline is key factors for you being a successful trader. You can learn all the strategies you want in the world, everything, Fibonacci, everything you want, and you will not be a successful trader if you are not strong here. Disciplined and patient, very, and emotional control a lot. But that goes hand in hand with patience first and foremost, and this discipline as well. So emotional control, discipline, patience will make you a successful trader. 80% is here. 80% of trading is here, and I'm talking about mindset. And 20% is knowing strategies. It's knowing different trading strategies, forex strategies, crypto strategies. That is 20%. 80% is mindset. So focus, patience, discipline, and emotional control. Now, market didn't do what we wanted it to do. We wanted market to close above. We wanted this candle to close above the yellow line, the yellow 20-day EMA on the 50-minute time frame. It didn't. It closed below, causing engulfing candle, a candle that is a selling candle that is bigger than the buying candle just previously. So what's happening then? That signals to the market that we're about to reverse. That signals that the market is about to reverse and continue downwards. So what's happening now is that the next candle that opened up directly after this engulfing candle is testing the 20-day EMA from the bottom. So in other words, we're looking for sells now, not for buys. So we leave it like that. We let it be like that. We let the market do its thing. If we're looking for buy again, then we're looking for the buy above the 20-day EMA on the hourly time frame. Let's go to Manara and see if we got something more interesting cooking. Nice one, but already ran. This is a nice one, but I'm not going to call that out because it's NAS 100 on a daily time frame, so it's a lot of pips. That means I know a lot of you can't take that trade because you got to have big accounts, big trading accounts. This one is interesting. NZD CAD is facing some kind of resistance here. Okay, interesting. And there's a Gartley pattern. Got this one as well. Okay, now it gets more interesting. No, it doesn't. NZD CAD. There. NZD CHF. It seems like CAD is facing some kind of resistance because it ain't moving that much. Yeah, we're going back to NZD CAD, this one. All right, let's check this one. NZD CAD. Let's do like this. Duplicate. We keep this one on screen. We go back to NZD CAD. Plug in the charger. All right. NZD CAD. Where do we got that? That's NZD CAD. NZD CAD had a buy from Manara on the full hourly time frame. So for y'all that didn't hear that, next week we're doing a boot camp. So every morning when I'm streaming here, every morning from next week, I will go through some basics in trading. Everything from the most basic stuff. It will be a basic trading boot camp. So what is a candlestick, for example? What is a candle? What is an engulfing candle? How do you read candles? What is price action, support, resistance, trends, volume, Fibonacci? We will speak about all of that, and on TradingView also how to use TradingView and stuff like that. So we will still live stream trading and trades, but we'll be focused on educational material. So if you are new to trading, that will be perfect opportunity for you to get some basics in. Now, NZD CAD, Manara calls it for a buy. What do we do? It's in the demand zone. It's in the demand zone. And it looks like basically right now it doesn't know where they want to go. Like it's deciding upon a direction. Yeah, definitely. You see how it's playing around the 20-day EMA on the 50-minute time frame. It's below it right now, but it's just playing around it. So the NZD CAD right now is definitely not a trade for me. It needs to. It's like a person that don't know what way to choose, and it's in between and choosing what direction to take. That is NZD CAD right now. So it's in before it breaks out from this demand zone, the 78.6 to the 88.6 Fibonacci retracement. Before it breaks out from this zone, I don't see any direction of it for it. So Manara says it's a buy, but we will just patiently chill with it for a while and see what happens. That buy would in that case be from here. Let's go and check crypto and see what's going on there. Okay, before we need to check the US dollar. Is it doing something crazy? Nah, it's retesting the 20-day EMA as support. Let's see if that holds. Why we're checking the US dollar is because Bitcoin tends to be affected by what's happening in the US dollar market. Everything is affected by it. So, Bitcoin. What is Bitcoin doing? Interesting. What I'm gonna need to do is clear some of these drawings. I have a lot, as you guys see, a lot of old drawings here. Bitcoin. All right, so look, just to do a quick recap. Bull run, 2021. Spiked in November 2021. Market started to what? Drop. Dropped. Everybody thought that we had the bottom at about 35,000. No, we did, and it came up, but no, we didn't. We started to drop more, and we came down all the way to 15,500. So that's 15,500 is the bottom so far. And 15,500, if we put Fibonacci from this bottom, where this whole run started. The whole run started after COVID. This was the COVID dip that you see here, and after that we started to climb. And if we look at this, we have the demand zone, the Fibonacci 78.6 to the Fibonacci 88.6 retracement is the demand zone when we're looking at a bullish swing. Okay, so This whole thing here is the demand zone, and if you guys go back and look at some videos that I did in, when was it, before the summer of 2022, and we were, I don't know, here somewhere maybe, I said that the markets will come down to the demand zone. Markets will at least come down to 15,000, 16,000. That is exactly what happened. I was spot on with that. But I also said that I believe that the markets will come down and test the bottom of the zone, which is the 11,400 price level for Bitcoin. And I still believe that. So I think the market had its relief rally, very little, very short. Everybody got happy, and from here, maybe we go up a little bit more. Maybe we'll test these zones at about 28 to 30,000 USD, and then drop back down to 11,400, maybe beneath that, to test those areas and really cause some major pain in the markets, because it's when it's maximum pain. Market always wants to cause maximum pain, and when you got maximum pain, when everybody gives up, even the most bullish people gives up on Bitcoin or whatever it is, that's when you'll see the market reversal. So I think we have more pain to come before we will see the run upwards. But before that, we might see the market maybe climb up a little bit more before it drops, or it just drops directly from here. That's what I see for Bitcoin on the long term. But for this whole year, for this whole year, I see pretty much this. I see pretty much this. Let's see, it comes down here. Understand? Oh, sorry, man. That was a lot of years. So something like this. And in 2024, in 2024, that's when I think we will see the real bull run start happening. And market will just explode upwards. And my price target for the bull run is at least $150,000. What do I base that price target on? Previous swings and the adoption of crypto, the adoption of Bitcoin, because there's a lot of adoption going on, and institutional money is flowing into crypto, which means that institutions are more and more acceptant of cryptocurrency, especially Bitcoin. XRP might as well have a very good run. Ethereum as well, of course. ETH always one of the strongest cryptos, and the crypto with the most utilities is Ethereum. So with all the adoption, with all the liquidity, looking at institutional liquidity coming in, looking at on-chain analysis, I'll see markets hitting at least $150,000. But that will be during the 2024 and 2025. All right, important to understand. So we're looking at the long term. For now, I think the market coming down more before we will see that run start happening. Now, let's take a quick look at gold before we go into other stuff. Do we have a trade for gold? Has it come back down? Yeah, it has. So gold right now is, that wasn't my purpose. Gold right now is what? Testing the 20-day EMA on 1 hour, and on the 50 minutes, it's using it as support. So if we want to see a buy for gold, we want to see that buy from here. From there. Oh no, we don't want to have that big of a stop loss. The stop loss would be at about 81. And the take profit, that's the interesting question. Where would the take profit be? To see that, we have to resize this. Remove this fib. Pull a new fib on this whole swing. So the top, this is a swing, an impulse that you see here. A swing down, a big drop actually. This is a sequence, an impulsive sequence that we have. And from the top of that one to the bottom of it, we have our first Fibonacci retracement level at 23.6%, which is at 1883. Okay, and that's the zone that I see as entry for this market, for this trade, if we're going in for a buy on the gold. First take profit would be $18.91. $18.91. Let's do like this. That's the first take profit. And second take profit is, of course, at the 38.2 Fibonacci retracement from the whole swing I was talking about. That's the take profit 2. And take profit 3 is right underneath the 50% Fibonacci retracement, right underneath. So at 1909. This is a trade I'm seeing for now. But first, as I said, we want to see market come above the 23.6 Fibonacci retracement. See it confirming it as support instead of resistance. If it does so, we have a trade. I'm calling the setup out in the Prosperous Telegram channel. So that's that. And as I said, if you're in the Telegram channel, you got the link in the description box below. But with this said, I'm done for today. I hope you guys got some value out of this. Stay blessed and be prosperous. See you guys soon again.